Ankita Limited offered public issue of 10,000 equity shares of 10 rupees each. This is the face value at a premium of 12 rupees each per share. This is issue value. Total number of shares issued 10,000 number of equity shares. Face value is 10 rupees and premium is 2 rupees per share. So issue value is 12 rupees. On application 4 rupees, allotment 4 rupees including premium. So application money is 4 rupees. Allotment money is 4 rupees. Out of 4 rupees, 2 rupees will be credited to capital account and balancing 2 rupees will be premium amount including premium. On first and final call, balance amount. So all money is 4 rupees. The company issues share at 12 rupees. Company received all the money. The issue was fully subscribed. Give journal entries to record the above transaction and also show balance sheet. So in the balance sheet, liability side, issued share capital will be 10,000 equity shares of rupees 10 rupees each. So amount will be 1 lakh and security premium will be 10,000 into 2 rupees per share premium. So 20,000 total 1,20,000 rupees. And on the asset side, cash bank account will be recorded at the rate 1,20,000. It includes both the money, equity share capital account as well as security money. Let's start with journal entry. In the books of Ankita Limited, first entry will be on receipt of application money on 10,000 equity shares, 4 rupees per share. The amount will be 40,000 rupees. Entry will be bank account debit to equity share application account. Application money received in the bank. So bank is the receiver, bank account debit. Amount will be 40,000 rupees. 10,000 equity shares of 4 rupees each. Second journal entry for transfer of application money to equity share capital. Amount will be same. For first entry, narration will be being application money received on 10,000 equity shares, and narration for second entry will be being application money transferred to equity share capital account. Next journal entry on allotment. Allotment money is 4 rupees and 2 rupees of premium is included. So entry will be equity share allotment account debit to equity share capital account to share premium account because premium of 2 rupees is included in the allotment money. So amount will be 10,000 equity shares at the rate 4 rupees each. 40,000 rupees is amount allotment money. 2 rupees will be transferred to capital account and 2 rupees is premium per share. So 10,000 into 2, 20,000 rupees will be security premium and balancing 20,000 rupees will be transferred to equity share capital account. So entry will be equity share allotment account debit 40,000 rupees to equity share capital account 20,000 rupees to share premium account or security premium account 20,000 rupees. Narration being allotment money due with security premium of 2 rupees per share. And next journal entry will be on receipt of allotment money amount 40,000 rupees on the debit side, 40,000 rupees on credit side. Narration will be being allotment money on 10,000 equity shares received along with 2 rupees equity share premium. So first two entry will be for application money received. Third and fourth entry will be for allotment money. Now fifth and sixth entry will be for first call money received. So first call money due entry will be first call account debit to equity share capital account. Amount will be 10,000 shares of 4 rupees each, and this is first and final call. So entry will be equity share first and final call account debit to equity share capital account. Amount will be 40,000 rupees on the debit side and 40,000 on credit side. Narration being first and final call due on 10,000 equity shares, and last entry will be bank account debit to equity share first and final call account on receipt of first and final call money. Amount will be same. Narration being call money received on 10,000 equity shares. Completed.